We'll call the meeting back to order. Next up, we have tribal credit.
Good morning, Council and Madam Chair. I thank you for taking the time today to look at our tribal credit plan of operations update. So kind of moving through it, we'll be looking at pages 98 through 104, I believe. And I will just get started when everyone's ready.
Good afternoon, Pete. We are ready.
Okay, so as you guys well know, tribal credit has been a part of the tribe since 1936, and really the main focus of it is to give opportunity to tribal members where they weren't given opportunity before by traditional means of credit, so to speak. So with that being said, tribal credit has been kind of a legacy program within the tribe, and it has a lot of good benefits for our tribal membership. Of course, with that over time, with how we operate and the plan of operations, we did see a need to update it to be able to transition with the times and technology and make the correct updates to make sure that we're competitive within financial lending to our tribal members. So with that, we in the past probably year and a half, we've been working on updates to the plan of operations. And of course, the plan of operations scope and purpose really guides our policies, our procedures, and our guidelines of how we operate tribal credit. With that, let's see. So the tribal credit plan of operations has a committee, and that is made up of 2 council reps, our 3 credit committee officers. Rick Enius at the time was the Director of Financial Management, now is the Executive Director of the tribe, Lorma Sloan, who is the Assistant Credit Manager, and myself. So our position was to look at every piece of the policy, the plan of operations, and make the proper changes to it to make sure that it's a working document and make sure that it's going to work for tribal membership. So some of the general considerations with the plan is, like I mentioned, is the plan of operation really guides tribal credit on what we can and can't do within the credit program. It sets our parameters on accounting practices, general compliance and procedures, guides how we can lend and collect funds from members who borrow money, and then just our overall lending guidelines. The goal of this committee was to update the plan, like I said, is to accommodate for technical advances along with other lending advances. And then really this was the first significant change in quite a while. And there was a lot of stuff within the old plan that was tied to BIA things that just no longer exist. So we were happy to strike that out of the plan and move forward with kind of a new plan. Of course, our mission statement with tribal credit is to improve the social and economic condition of CSKT membership by providing sound, equitable, and accessible loans through a sustainable revolving loan program. So what we want to do with that and the program is we've created some objectives along with that. And that's really viability of the loan program, economic development for our tribal members, resource utilization, so that's meaning being able to create homes, business opportunities for tribal members. Along with that is improve housing needs for tribal members, improve access to education for tribal members, and along with the objectives internally, we want to improve collaboration within our CSKT departments, and other tribal entities that we work with on a day-to-day basis. And of course, one of our newest objectives that we're excited about is the access to personal finance education. So we do know that, you know, between Housing Authority and Economic Development, there are opportunities for personal finance education. You know, we want to be a part of that as well, and make sure that we're helping our membership understand, you know, what the home ownership means, what credit means, and you know, help them understand that sometimes debt isn't the right way to go, and you know, savings plans or whatever, we can help them facilitate that in budgets as well. So we're hoping that the budgeting tools that we can provide will further educate and help our membership with any financial education needs that they may want. So moving on to some significant changes, and I'll kind of go through each one of these a little bit in depth. Within the plan, we changed, you know, a lot of the procedural guidelines that we have within the policy, and making it streamlined for better use of our resources internally, and streamline how we can do business. Some of those functions are definitely on the accounting side, and that's really kind of the internal facing stuff of how we do our accounting and audits. But one of the most beneficial things that we could do at Tribal Credit would be probably interest rate management. And really what interest rate management means is our ability to be able to look at interest rates and make changes as we see is appropriate, as far as being competitive with other banks and or lending institutions, and making sure that, you know, there is, you know, benefit for our borrowers as well, so that we're not just stuck with a high interest rate and our membership has to suffer with a higher interest rate, especially if a bank is offering a lower one. So one of the things with the interest rate management that we wanted to build into the program was to be able to look at interest rates and make sure that we're competitive, meaning if rates are lower, we want to try to be closer to a lower rate than what we currently are, or if rates do increase, that we're, you know, we may be higher. So we want to make sure that we're able to change that with the changing times, and make sure that that's kind of more flexible than it was in the past. In the past, that was set by Tribal Council based off of recommendations from the Tribal Credit Program. What we want to make sure and do is be able to look at interest rates 2 times a year, in April and in October. And then if we're within a certain range that we feel that is beneficial to both the program and to membership, we may keep it the same, or we may change it to make sure that we're looking at that benefit for membership and the program. So one of the big changes with that meaning is that we're going to be able to publish those rates, and we want to publish them biannually. So basically in April and in October, to make sure that people know and see what our rates are. One of the other things that we changed is just basically our collateral and our security. So what we noticed within our collateral and security is our program was really looking just at home ownership. And, you know, I mean, that's a great tool for our membership, but that leaves out our business community, our agricultural community. So the focus with our collateral was basically home and property, and really shifting it to where we have more of a dynamic lending opportunities, is trying to focus on more business lending as well as agricultural type lending, to be able to add more collateral to that, so that we can, you know, make sure that we're being able to serve that membership. So adding a few more pieces to that really helped out, or will help out the membership. And that kind of comes to another thing that we changed or looking at changing within the program is how we look at creditworthiness. You know, right now, typically what we do is we'll look at, you know, of course, past history, but we also want to start looking at, you know, what credit reports to make sure that we're making informed decisions for the lending program. But then that also gives us opportunity to help with any financial guidance that we can give them. So if an individual may have some outstanding debts or collections issues, maybe we can help them out with viewing that credit report and giving them that opportunity to, you know, correct some things that had happened in the past. You know, not turning away anyone, but being able to make informed decisions and then being able to help the individuals at the same time. Of course, one of our biggest questions, and since we're kind of on the Facebook Live with a lot of our home loans, we get asked questions about co-applicants or co-borrowers, and them being non-members. So as long as the borrower is a tribal member and they have a non-member spouse, they both can be on the application. We will put them as a co-applicant on the application. So I just wanted to make sure that that was clear. We do have that written within the plan of operations. It was kind of something that was unsaid or unwritten rule, but we wanted to make sure that future borrowers understand that we will do that. And do it quite a bit, actually. So one of our other really significant changes within the program is the use of escrow accounts. So with what escrow really is to be able to help the borrower be able to make interest payments, taxes if it is a fee property, and insurance payments on the account. So what that would mean is we would make sure that if they have an insurance monthly bill with an insurance company for fire insurance or whatever insurance that they have within their home ownership or business, we can include that within their loan payment. So instead of the borrower having to make a payment to Tribal Credit and a payment to the insurance company, we would be able to make sure and make that payment for on behalf of the borrower to the insurance company. Or if they have fee property, we can make that payment to the local municipality, so that the individual borrower isn't, you know, they don't have to make several payments on the property. And a few things of why we wanted to change that is, of course, one is the ease of use for membership. You know, they're able to make that one payment to us, and then we would take care of that account for them. Another reason is sometimes our membership or our borrowers have been maybe a day or two delinquent on their taxes or their insurance. And if we set up an escrow account where they just pay us on a monthly basis, then we wouldn't be in a position of getting phone calls from insurance companies or, you know, phone calls from the county saying that, you know, your mortgage holder is late on their taxes or insurance. So really what we're trying to do is eliminate those types of phone calls and making sure that we're still servicing the membership at a lot easier rate. So with that, kind of moving on to another significant change is, you know, looking at our fees and insurance, what we accept and what we charge for our fees. So our origination fees on our loans are 1% origination fees. So, if you borrow 100,000 to purchase a home, we'll charge you 1% as origination fees. We wanted to make sure that we are taking care of the borrowers by allowing them to, possibly finance those through their loan, and before we didn't do that. So that is a big option that we've added within this program. It's kind of an opt-in, opt-out to finance, because a lot of times it doesn't make sense to finance the fees within your loan. That's kind of a standard practice in some banks. Some banks have that availability, but they don't actually use it. We just wanted to make sure that we're kind of in that same department of having it available, but maybe not using it. And then as far as our insurance, we typically have fire insurance for our mortgage loans, especially if they have a home. We wanted to make sure that our plan of operations expanded on the insurance portion of it and added hazard insurance as, the possibility of you may need to have hazard insurance on your property, or some sort of builder's risk policy as far as if there's a new construction. So, we wanted to kind of make sure that those were added in within the policy, just for our sake, and also for the borrower's sake, so that they're not getting into a bind if if they purchase property and they're building on a new property, that they're not actually, they don't have insurance, and if something happens, they're covered. One of our largest things that we've really changed and we are excited about is the fact of credit counseling and what credit counseling can do for our membership. Like I mentioned before, we do know that housing has a certified program, and they do credit counseling, and then also with economic development. What I foresee for us in the future is being able to provide those services as a team between the 3 different departments, making sure that we have a consistent, clear, concise message that's going out to our membership, and whomever wants to utilize that, it's available. And we want to make sure that we're trying to do our best to make sure that credit is a part of that, and making sure that we're just not known for giving out loans, that credit is well-rounded, and our focus is, trying to provide quality information, quality credit counseling to our membership. Another
question.
Oh, yes.
Do we have a full-time position that does credit counseling, or is this like a contractual employee?
We have a FTE for it. However, we haven't filled the position. We've advertised for it once, and we had a few candidates, but we needed to re-advertise for it. So, and that is something that we're still waiting for. And really what we want to look for as far as a credit counseling candidate is someone who's really going to be active within the community, kind of hit the ground running, and really work with us in creating a solid platform that can be online based, that can be working within the communities, that's in the office. So we see this is being a huge thing for membership. So we're looking for the best candidate for that position right now. So if there's anyone really interested in it, have them contact me, because I'd really like to get some feedback in how they would want to develop it and make it their own.
Thank you.
Yes. So within the significant changes is kind of our defaults, delinquencies, and foreclosures. So what we've analyzed over the past year and a half is looking at distress loans and why individuals may be in a position to where they are in default, in delinquency, or are almost in foreclosure. And what we wanted to do is make sure that we're giving the borrower every opportunity to be able to make payments as they promised within their promissory note. But if there's any issues with that, it is to try to find a way to help them stay within their homes, especially with our home mortgages, and being able to give them the opportunity to figure out some sort of budgeting payment plan that they can work with us. With that, though, we have to make sure and still be very business about it, and make sure that we are able to send reminder notices to individuals, that we revamp how we look at past dues, looking at 10, 30, 45, 60, 90, and 120 days past due, and what we do in each one of those time frames. So, let's just say, for instance, if they're 10 days past due, it may be, hey, you're delinquent. We need to make sure that you know what's going on. We want to make sure you're trying to make your payment, versus 120 days past due, where we're looking at possible collection action, and or the potential to see if they're in a position to maybe refinance a loan, or what is going on within that. So we really revamped our communications and how we're going to communicate with people, because what we've noticed in the past is we have that initial communication, but then it drops off after a certain period of time, and then all of a sudden we have a huge amount of loans that may be past 60 days past due, and we need to do something about it. So what we want to make sure is correct our messaging, and one of the things that we've done with that is the statements, the monthly statements that we already send out. That has helped out a bunch as far as just people being informed about their loans and informed about their payments, and it really cut down on a lot of the questions that we would get early on when I started at Credit. But that is going to be a big portion of the defaults, delinquencies, and foreclosures. Another portion of that, of course, is going to be trying to make sure that we're keeping membership within their homes. So that's kind of where that credit counselor comes into effect as well. So if they're at a certain point and maybe the individuals are struggling on budgeting, we want to make sure we're bringing in our credit counselor at that point and making sure that they're working with the individuals to try to find a way to budget, so that they're making sure that they're making their payments on time, or that they can make those payments. And what we found helping the folks that we've helped just recently is kind of helping them figure out that budget, and then seeing how their payment history goes. So really we've put them on kind of a payment plan to where you make your regular payment plus $100 or $150 or whatever it may be for the next 6 months, and we'll consider refinancing your loan to pull you out of that delinquency or default state and out of possibly foreclosure and into just making regular payments. And really that is the goal, is to make sure that we're keeping our membership in their homes and making sure that we're avoiding foreclosures at all costs. Of course, that's going to happen in some instances. People just won't want to work with you for whatever reason, and we have to make sure we have to keep our business hat on and pursue some of those, but we really hope that we don't have to do that. With that kind of goes to what we see as an opportunity is being able to refinance these folks, and they are kind of their higher risk loans, but within the new credit plan of operations, we would be able to refinance these individuals, but then also at the same time help them with budgeting and credit counseling, and make sure that they're on track throughout, the first, the life of the loan, really. So we want that's the goal. I mean, and if we can create that and make it more streamlined, to help that out, because every situation is different. Some people just they for whatever reason may have given up, or some are just struggling to make ends meet, and sometimes we're kind of the last ones that they need to pay because they got to eat, so. But if we can figure out a way to help them through that process, we're doing our job as Tribal Credit. That one is kind of a big one. Like I said, is revamping our messaging to individuals. One of the things with that restructure on the delinquent loans is definitely the refinance option, some sort of extension agreement, because that was not built within the plan, and then a deferral type of a loan payment deferral. So right now we don't really, we can offer it within our program. However, we needed to create some sort of policy to make sure that if we do a deferral, that, we're at least collecting interest, interest only type payment environment, or like an uneven payments, to where, say, an individual, they can only make a couple $100 a month right now, but in 3 months when they back on a contract, they can make more payments.
Pete, Fred has a question.
Yes.
Pete, on delinquencies, I guess the one and only time that I ever had an issue with Tribal Credit, overall, it's been a really good experience over the years that I've used the Tribal Credit Program. And of course, this was before your time, but there was a situation where I missed a payment in like June, and really didn't find that out until like September. Is there a program that, like Mission Valley Power, that within a certain amount of time after you miss a payment, that a notice would go out automatically? Is that a specialized program that you'd have to develop, or just a question for you?
Sure. No, and that is a good question. So it's a specialized program to do the call center type of environment for us. That's kind of the catch-all with that portion of it, is it is an add-on within the program that we currently have. However, what we do have the ability to do, and we're doing the build out as we speak, is to be able to do more online stuff. So really, instead of the automated phone call, we would be doing an automated text. That's an option for us. And then also email. We would be able to email you that information as far as account balances and whatnot, or give you those types of reminders. With that build out, we do have an online platform that we're creating as well. And so what that'll do is really, that's going to try to take place of your monthly statement. And what you can do with it is, we would send you a reminder that would say, here's your monthly statement, or hey, your payment's due for June. And then you can click on the link, go to your page, your online account, and you can make that payment online. So that's something that we're working on right now. I know that the issues that we're having with it are just getting the bridges built between our operating system and say our credit card processing. So those are kind of just those management issues that we're working through.
Okay, Anita.
Good afternoon, Pete. One of the things I'm going to keep advocating, and I think that you and I have talked about it before, is you talked about creditworthiness and credit reports. And I'd really like to see tribal credit be able to give people that credit that they deserve, which means your mortgage is one of your largest investments. And I know right now that it's not turned into the credit agencies, and it would be nice if somehow we could get more than just a letter stating that you're in compliance. The second thing is you talked about defaults and delinquencies. Are there any programs out there with the new ARPA that will help people with mortgage assistance who have lost their jobs or anything like that? I realize that we're not FDIC, but it would sure help if there was something out there right now that could assist people if they lost their job for some reason or something like that and couldn't make their payments.
Yes, and definitely, you know, as far as the credit worthiness and credit reporting, you know, that's a definite tool. You know, we utilize credit reporting only on trust loans. So, and that's us getting information about an individual, their credit history outside of tribal credit. You know, we definitely, I would like to see us use it internally as well, just to know, you know, the history of our borrowers. But like you mentioned as well, is making sure that we're giving that information out to individuals. You know, we do have the capability within our program to do that. Just a little bit more research on it, and being able to pay to, it's kind of a pay to use type of deal. You know, we just really, as a management function, we really never talked about really turning on that tool to use it for the credit worthiness. And as far as any kind of recovery dollars that are floating around to help individuals, you know, Housing Authority, you know, right now they have the ERAP program for rental assistance. We have been hearing that, you know, within the next, you know, within the future, there should be some mortgage assistance as well coming for all borrowers. Of course, you have to apply through the Housing Authority. You know, another thing that we try to assist with our borrowers is to make sure that they understand the Housing Authority also has foreclosure prevention programs. And we've actually had a few borrowers just recently use that or apply for it, and you know, it will help individuals out with, you know, say a few months or making that, you know, that delinquent balance go away so that they can get back on track. You know, bringing up what you meant of not being federally certified or you know, like a FDIC or NCUA, that really kind of brought around to our foreclosure prevention type loans as well. So what we wanted to make sure is, hey, we noticed that there were issues with COVID, and there's people that are losing their jobs or can't go back to work for whatever reason. You know, we wanted to make sure that we were hedging and being able to provide something for individuals. So say if the foreclosure assistance through housing wasn't enough, then we would be able to refinance, like I said, to streamline and refinance these loans to be able to help those individuals. Because I think psychologically, when you're behind, you know, you just don't want to make those payments. You may feel guilt or embarrassment or whatever. But if we can reset you to where you're making payments and you know that your payments are going to the principal and interest, not just interest, you know, psychologically, that's going to help out people. So that's really one of our goals in making sure in creating that foreclosure prevention type of product, we can do that.
Carol? Yeah, Madam Chair, thank you. Back to the credit worthiness, the whole idea that I like about tribal credit is its uniqueness and its ability to allow tribal members who don't have that ability to go out and on the open market and get loans for homes and whatever else they need. And so, but I hear Anita's side of it because in one instance, you could use a positive mortgage to your benefit on a credit report, but if it goes the other way, then it's a negative, and so that could hurt the small guy or the guy that is really struggling to get by. So, with the 40 to 60 million dollar asset, which I believe tribal credit probably is at this time, I think we've done pretty well as a tribe to give this opportunity for tribal members, and I just hope that we don't change it too much to just make it like another bank down the road, because I think that's the whole idea of this, is the uniqueness that we have and the revenue that it does bring into the tribe, when we do do the dividends. And so it's a good program, and I'm really glad that we have it. And I think it was started back in the 30s, maybe.
1936, yes.
Yeah, so thank you.
No, and to your point, I think that, a lot of times as tribal credit, we are going to take a little bit more risk on helping our membership, just for the sole fact of that's who we are. That's our identity, is making sure that we're giving that opportunity. And that kind of ties back to that interest rate management. We may, within our credit worthiness, we may not be able to offer a competitive interest rate with a bank, because we know that, possibly, hey, this individual may have, 4 or 5 other issues with a bank, but, they can make their monthly payment. We know that they can make their monthly payment. We're going to try to help that individual out. However, like I said, is our base interest rate will always be a little bit more higher than a traditional mortgage company or a traditional bank, just for the sole fact that we know that our guidelines to lending that money to that individual, our criteria is less. We're asking less of the borrower to come borrow money from us than say a traditional bank.
If I can, Madam Chair, I just have one more thing about the foreclosure program that's going to be taking place, that housing is currently applying for, that'll be hopefully available in September. I'm working with a number of families right now who are looking forward to that program to get back on track with tribal credit so they don't lose their homes. And I know we had a council member talk about, why don't the tribes buy those foreclosure homes? Well, I found out tribal credit is not foreclosing on homes just because of the COVID. And so I was really thankful for that. So now with this new program coming up, it can help people to get caught up, but it's the individuals that won't stay caught up. And there's a few of them. It just, under his program now, he'll be able to closely work with those individuals and hopefully keep them on track. But, there's just some people that it's difficult to do. So, but anyway, that's going to be a great program for us to help our people.
Yes, thank you, Carol. And yeah, if anything that we can do to be able to streamline and help the individuals, we definitely want to do it. Of course, within reason, like you said, is there some folks that just they either don't want the help or outright refuse it, or they just feel defeated. So what we want to do is we want to be able to be a partner with them, and not be the one trying to always try to take their home. So with that is a lot of times in a traditional banking setting or mortgage company, they're pretty adamant on defaulting and going right to foreclosure or some sort of collections actions. We kind of take the different approach, and we want to try to help people try to get out of that before we just go right for that default and collection action. So, kind of moving on a little bit is looking at our products, our loan types. So I do know with some of the internal reviews with this, the mortgage portion of it really looked like it was just for housing, but our mortgages are on all types of properties. So if you're buying agricultural land or bare land or whatever it may be, we can assist the borrower. And really we do fee properties, trust properties, and CSKT leasehold mortgages as well. One of the things within our program that we're looking forward to and really adding to the program on our education loans is a workforce priority loan forgiveness. And really what this is a program that is internally facing within the tribe and utilizing other tribal departments such as economic development and education department to establish criteria in providing some sort of workforce priority loan forgiveness. So kind of in a nutshell, what this means, and this is kind of a high level without anything really being adopted yet, is if the tribe in 5 years know that they need engineers, that if a individual goes to school or has an engineering degree and they work for the tribe, they have an opportunity to apply for the workforce priority loan forgiveness. So, I mean, that's throughout the board. So if it's accountants, if it's, preservation, whatever it may be, this would be an opportunity for us as tribal credit to forgive our portion of their education loan if they received education loan from us. It's kind of hard for us to do it for other banking institutions, but we know that we can control what we have within our education loans. So that is something that we've been working. I've been working with both education department and economic development. I know it's kind of taken a back seat as of late. However, I think that within that program, we should be able to come up with something that will really benefit our membership, especially the ones who are looking for the higher education. So with that as well, moving on, kind of what we have is we've always had the ability to do business loans. We just really put it on the back burner, and it wasn't something that we pursued as a credit office. However, we do have business loans, and we do have set, criteria around those business loans and what we can and can't lend out. Same with agricultural loans. It was something that tribal credit really was founded on was our agricultural loans. So individual farmers, individual tribal member farmers, ranchers back in the early 30s weren't able to get, wasn't able to buy cows or wasn't able to get seed for, planting. And that was what tribal credit was really established. And really the neat thing looking back at some of the old records are, this tribal member got a loan for 2 milk cows or something. So, or this member got a loan to be able to haul grain to Missoula, and it's detailed within those records, and it's really neat to see that kind of stuff, and knowing that that's how the program began. Another type of loan that we do have is, of course, our CSKT enterprise loans. So those are really in place for a tribal enterprise. So if you as tribal member or tribal council creates a new LLC, we would be able to provide capital for them. Of course, our short-term personal unsecured loans, that's something that we will continue to do. A permanent disability loan, those are also in place, and we use those for individuals who cannot work, that may have a disability, can't meet their loan payments, and we can refinance those loans. Letter of credits, really what those are entailed is giving a business, basically it's a bond. So if a logger needs a bond or a letter of credit for a logging unit, they can come and see us. If a rancher needs a letter of credit or a bond for a tribal CSKT tribal lease, we could provide that. And what we also, like I mentioned before, within the defaults, delinquencies, and foreclosures, is that delinquent refinance, that foreclosure prevention. That's something that's new for us, and we're really looking forward to creating that program and trying to be able to help individuals. And like I said, there's a lot of criteria tied to that as far as budgeting and credit counseling and making sure that we're trying to give the tribal member that opportunity to succeed. And like I mentioned before, we want to make sure that our interest rates are published on a biannual basis. So we're looking at April and October are really the times that we will review those interest rates, and we would periodically change those interest rates based off of those review. And that is really the nuts and bolts of what the changes, what we're looking at as far as the plan of operations. And I'll really leave it up to any questions or comments on that.
Thank you, Madam Chair, members of council, and thank you, Pete. I appreciate your presentation. So I was just curious to know, sorry about that. I don't know what was going on, but I was just curious to know, ever since Tribal Credit has changed their let's see, where was I going with this? Ever since Tribal Credit has changed their long-term or their home financing from 7% to 5%, do we still have tribal members out there that have not engaged this yet and taken advantage of that 5% loan?
Yes, we do. And there's a few reasons behind that. Some with the old interest rate, we had a program that had mortgage insurance. And what the mortgage insurance did was protect the borrower if there were any, say if there was loss of life or if the structure was burned to the ground, that this would contribute to paying off the debt with Tribal Credit. So we still have a number of those loans that will stay at the 7% because we will not offer that mortgage insurance on any other product that's new. So it's only within that 7% loan. So a lot of individuals are sticking with that product just because of that mortgage insurance, and the rate that they pay is a heck of a lot less than what they could get at an insurance company, because a lot of them just don't do it anymore. Especially on a loss of life situation. So, individuals stick at that rate. Others, it came down to either just not wanting to fill out the application. Some are, they feel that they're paying the right amount and they don't want to change. And of course, there's others is trust mortgages. We have a huge criteria that we have to send to the BIA for trust mortgages, and some individuals just don't want to provide that extra information and then wait the amount of time that it would take to have that trust mortgage approved in the Portland office. Because anytime that we have a trust mortgage, we take it, we have a big bundle of paperwork that we actually send to the Portland office, and they go through a credit committee such as our own, and they will approve or disapprove or ask for more information at that time. So some folks just, they just choose not to. it would be beneficial for some to definitely change interest rates. Others, they like I said, is they just feel comfortable with it.
Okay, thanks, Pete. And just one additional question. So those trust loans, if I remember right, at one time were approved locally here through our superintendent. When did they start going back to Portland?
Boy, it was before I started, but I know that when, speaking with the assistant credit manager, Lorma, she's a wealth of knowledge, been here for 30 plus years. I think it was probably about, 8 to 10 years ago that they changed that. I believe they factored it back to Cobell settlement. So whenever that was.
All right, thanks, Pete.
Yep.
Any other questions? Comments? Well, this is the second time we've had a look at it. So are you looking for approval today for the plan of operations?
I'm going to leave that. I would definitely welcome approval today. However, if you guys need more room for comment, I would be more than happy to come back on Thursday after some sort of comment or any other additional review that you guys may want.
Fred?
I was just going to offer up a motion to accept the report unless they're otherwise.
Yes, we're doing.
Our plan of operations. Plan of operations.
Okay, we have a motion by Fred to approve the credit plan of operations. Second by Martin. All those in favor? Motion carries unanimous.
With a statement?
Go ahead, Carol.
Yeah, I would have liked to see a little more tribal member involvement, but I guess they have access to a copy of the tribal credit plan of operations.
Okay,
Okay, thank you.
Len?
Just wanted to comment here, Pete. So last week, I brought up the issue of foreclosed homes, and I just wanted to give clarity on that. So the foreclosed homes I was referring to were the homes that have already gone through the process, have already been foreclosed on, and Tribal Credit owns these homes, and they're advertising them now today. So when I had that discussion with council, those what I was referring to. And the information that I was seeking at that time, Pete, was how many homes are there that we have, and what would be the cost of for the tribes to purchase all those to continue to offer the tribal membership, rather than putting those out for public auction. So.
Yeah, and to add to that, I know that one of the things that we looked at as far as, moving forward and as far as a part of the plan of operations was, we would definitely offer the property to the tribal membership, for a period of time, but we also want to make sure that it is offered to the tribe and through the lands committee as it sits before we would even entertain the option of selling something on the open market, just for the plain fact of wanting to keep that within the hands of tribal members or the tribe itself. Because that's a huge thing for us, and that's a huge thing for me as far as trying to make sure that we're trying to get our reservation in our hands, in tribally owned hands, whether that's individual membership or tribally owned, is making sure that we're giving that opportunity to that party first. And if there's no interest for whatever reason, then we would offer that to kind of an open market. But it definitely is going to go through a rigorous set of eyes before that even comes to that point.
All right, thank you, Pete.
Martin?
Thank you, Madam Chair. And Pete, I just wanted to thank you for the changes. I think that Carol's right that we definitely could have got more member input, but I feel like a lot of these really benefit our membership and the people that hold loans within credit. And so I think that, what you're doing today, especially with like the escrow and those type of things will benefit tribal members, because I'm one of those people where getting insurance on the side is a pain, and I'd rather it just be rolled into like the banks like I used to do with our commercial banks. So thank you for doing that, and looking forward to the positive change, and hopefully we get that credit counselor position filled as soon as possible, someone that's fits your criteria. So thank you.
Perfect. Thank you, guys.
Thank you, Pete.
Okay, have a great day.
You too. Okay, do you guys need a break before lands ordinance? We'll take 5. Okay, we'll call our meeting back to order, and we are ready for lands.
Good afternoon. Just a reminder, we'd like to have this in executive.
Okay, we'll go out of regular into executive.